Welcome back to the currency segment then, where the Indian rupee ends at 54.26, close gaining almost 0.5%. A weaker dollar contributes to the gains, and also the sentiment that there would be inflows coming in because of the share sale in Bharti Infratel and perhaps NMDC as well in coming days is something that is supporting the sentiment here. Also joining us for currencies is Abhishek Goenka. He is CEO India Forex Advisors, and Sacha Tihani is Senior Currency Strategist at Scotiabank, also joining us on the show. Abhishek, let's start with you first, and then there's a lot happening in the Indian markets in sense of FDI in Parliament that has been supporting the sentiment, and also the expectation that you might be looking at those share sales supporting.
Of course, we are getting a lot of good news in the market, and fortunately this time the rupee is also getting a little stronger, So I personally feel that the strength could last for some more time, probably till 53, 70, 80 levels. And I think if you get the levels below 54, I think it's an amazing level for the importers to go cover in the market for the next 2-3 months. And exporters, I think we're going to get levels of 55 once again, so that they can take long-term positions for exports. But overall, I think the rupee bias still remains bearish, though with a little momentum in the short term.
Sacha, getting you in the conversation as well, and how have you seen the FDI in retail? But yesterday, of course, wasn't such a great day at Parliament. Ditto today. Do you think all of this is creating a further environment of perhaps opening up in Indian markets?
Well, it certainly does seem to be the short-term tact of the government. There's a definite recognition that the slowing growth in the past year and the still high rate of inflation has made very clear that the Indian government needs to undertake further structural reforms should they want India to continue to grow at rates that it has been over the past couple of years. So all of this can be rupee positive.
So that's about the domestic market, but what is your reading into the US fiscal cliff stalling and markets expectation of another QE as the meeting starts for Fed today?
Well, I think the more or the steeper the fiscal cliff fall off and the more acrimonious the debate is amongst the U.S. political parties, the greater the probability that the Federal Reserve is going to need to step in and undertake additional monetary easing. I think that we're probably leaning towards another incremental addition of easing to maintain the pace of expansion in the balance sheet that was indicated at the last, the QE3 announcement, really. So I think we are probably leaning towards that expectation.
Abhishek, bringing that point to you as well, while the domestic factors of course do look a bit bullish, but how are you reading the international cues? Because ECB meeting previous week has pointed towards further declines in economy and GDP in 2013, while the FOMC meeting of course is something that markets are awaiting now.
Of course, that's the reason why we are seeing the US dollar getting slightly weak in India and across the world also, because there has been a lot of speculation in the market that the QE will still continue. Probably the operation twist is finishing, and they will have probably a new form of QE. Probably they'll buy treasuries to the tune of $40-45 billion per month. Of course, you don't know what's the quantum going to be across, but then that's the idea that we're getting, that a combination of MBS, that's a mortgage-backed securities, and short-term treasuries, which probably be a combination which they will be going forward, and because of which the US dollar is getting a little weaker. But if any kind of a surprise we see in terms of not having QE, then of course the US dollar is going to bounce back very strongly.
Vijay, getting you in the conversation as well, what's your sense now? Because today has been a very steady as well as a choppy day, because the markets are looking forward to on what FOMC really could do. How do you see the rupee trading for the rest of the week on charts now?
Manisha, chartically, the US dollar in the NSE currency derivative segment is likely to encounter resistance at 55.5. That's a kind of a threshold which the dollar bulls will have to overcome if they want to bring dollar back into the buy zone again. On the flip side, the rupee, should it appreciate past the 54.20 levels, I'm referring to the futures levels here rather than the spot, I think a further hardening up to 53.60 to 53.80 band is likely in the coming 3 or 4 sessions that are part of this week. I would be a little surprised if the rupee was to appreciate beyond 53.50, 53.60 levels.
All right, so both our experts really are looking at those levels there. Abhishek, what's your sense now coming in for the Indian markets? Of course, FDI is something that has very strong sentiments coming in, and of course the money flowing in as well, capital inflows for that matter. But tomorrow is the IIP numbers coming in. Markets also are talking about interest rate cuts. The inflation is still on the higher side. How do you read the other set of numbers now?
See, of course, the market is pricing in a higher inflation. that is not going to be good for the economy, and higher IIP. Now the expectation is that probably this time they're not going to cut rates. Probably a cut in CRR is possible. Next time probably they might look at cutting rates. So overall, but the focus still on the trade deficit numbers which has come out today. It's not very nice, and the market is watching it very, very carefully. And RBI cutting rates in Jan almost priced in market. So I think the basic fundamental of the trade deficit still remains, and I think the foreign investors will be watching it. So despite all the money, we are not seeing the rupee going very strong. So we still maintain a little bit weakness in the coming year.
So some bit of a weakness, 53.70 to 55 on the higher side is what our experts are talking about for the Indian rupee. Sacha, Abhishek and Vijay, thank you so much, gentlemen, for joining us for the currency leg of the show. With that, completely out of time on hot commodities. Thank you for watching.